Hello, hello. Happy Wednesday, everybody. Jamie here. Hope everybody is doing well. I am live right now in Financial Literacy for Women Business Owners Facebook group. If you are not part of it, make sure to come join, even if you're not a woman. We have plenty of men over here as well. And I'm also live on Balance CFO, my Facebook page, and also on my YouTube channel, Jamie Trull. So if you're not a subscriber, please make sure to subscribe. If you're watching me over there, make sure you've hit that little subscribe button down below because it means a lot to us little business owners when you guys do that. Okay, tell me when you're here. I see some people joining, so let me make sure that I can see you because hi guys. Okay, cool. I see some people joining. Awesome. So today we have been, I always like to say what date it is. So it's Wednesday, July 22nd. The last several months we have spent talking a lot about the stimulus, which we will continue to talk about as things change. But right now we're waiting on Congress to take some action on a couple of things, maybe have another stimulus, perhaps make some changes, extend the PPP and make that available to businesses for a second round, potentially. Also, there's some discussion of blanket forgiveness. There's a lot being talked about in Congress. I'm going to talk about a lot of that on Friday. So my Q&A sessions are Fridays at 1:30, and that's all stimulus. So for this specific one, though, I wanted to go back and really talk about some of my more bread and butter stuff, which typically what I'm doing in the group before all this COVID craziness hit is coming and telling you guys about topics that you tell me that you're interested in the realm of finance, accounting, and taxes. So my actual role, I am a CPA, yes, but I don't do taxes anymore. What I do is financial education. So I really like to help people understand these concepts better in their business, whether they're self-employed individuals, small business owners, and really help them feel comfortable and confident in understanding these concepts and then using them to better their business. So I'm a financial literacy coach. I'm also a profit strategist. I have a whole course on increasing profit and money management. So that is part of what I do as well. But because I am a CPA, I do teach a lot about different topics in the realm of finances. So today we're going to talk about the home office deduction. So I asked you guys in the group yesterday because I hadn't decided actually. This was one of those weeks where there wasn't kind of a pressing thing to discuss. So, which is kind of refreshing for the first time in a while. So I asked you guys what you were interested in, and a couple of you guys were talking about the home office deduction. And this has come up a decent amount now with everything that has been going on. So I think it's a good topic to really kind of get our head around. Now, I know that tax time just passed. Some of you guys might have extended. So this may be something that doesn't come up again for you until next year, but I think it is a good thing to be aware of even during the year because you need to be doing some things on your side to be able to make sure that you can get the maximum deduction for the home office deduction. Okay. So let's start out by first talking about who can get a home office deduction. All right. So if you have another place of work that is your primary place of work that you pay rent on or whatever you do, right? The home office deduction won't apply to you, right? So you can't take it if you are deducting expenses for another off-site place that you already have. You can't kind of do this. I hate to use the word double dip because I think it has another meaning in the COVID world. Yes, and Cheryl, I will talk about, it is a little bit different for daycares too. So I will talk about that as well, because there is a slight difference for those of you who have in-home daycares, which I know I have a lot of you guys on my page actually. So I do want to talk about the difference there, but we're going to start just by talking about the home office deduction in general. So if you have a dedicated space in your household, that is, and by dedicated, I mean, it can't be a hallway. It can't be used for a different purpose, right? So again, let's set daycares aside because there are some different rules for daycares, but everybody else, right? If you have a home, you have to have a dedicated space that you are using that home. And maybe you could also have like a place where you're storing product or inventory that can also count, right? or just a place where you're actually performing work. Maybe you're seeing clients there or not. It's just your primary place where you work. Like I have a home office. This is where I do the vast majority of my work. When you guys see me, here I am in my home office. So for me, this is the primary place. There's not really anything else that happens in here. Some people might have like a guest room, for example, that they're using as a home office. That wouldn't count. So if it's used for anything else, if it's a hallway, literally they had a case on this where there was a person who was deducting a hallway as their home office. And they said, well, that's where I work and I don't use it for any other purpose. The problem was the only bathroom in the household was on the other side of that hallway. You had to go through the hallway. So the IRS actually came back and ruled, nope, that is not, used exclusive purpose for business, and therefore you can't deduct it. Yes, sometimes the IRS actually, makes kind of a point of these things. So, I do want to say though, because I think this is important, a lot of people think that taking the home office deduction is an IRS red flag. It's not. Okay. It really isn't. The red flag itself, and it's not even a red flag, but the reason you may get audited is just being self-employed in general is going to increase, and having a Schedule C, let's say, that you file, that's going to increase your chance of getting audited in general just because of the nature of it, right? It's a little less straightforward than like a W-2. So that is, something just to be aware of. Don't be afraid though. If you do have a home office, deduct that home office. Don't, miss that. I'm going to tell you about a couple different methods for calculating that because there are a few, and some considerations around, what you might want to choose. Okay. So different people may choose different things. And yes, we're going to talk about, cell phone is different. Wi-Fi, cell phone is separate from the home office deduction. Importantly, it is a deduction. So you have to kind of figure out your percentage business use on your cell phone. You can deduct it on a Schedule C. I'm going to be talking a lot about Schedule C, self-employed people. This applies similarly to those of you who are corps, but there is a little bit of a difference. And I'm going to get into that here in a minute because the way you deduct this is going to be a little bit different if you're a corp, but the rules are still fairly similar. So when I'm talking through what you can deduct, it's going to be similar for you guys, but how that actually happens in practice is different if you're, say, an S corp. And your Wi-Fi, though, your Wi-Fi is part of kind of your home office deduction. So we're going to get into that here in just a minute. Okay. So so if you have an external location where you pay rent, you can't also get the home office deduction. Now you may be able to if you're just storing things offsite, maybe, but if you're working in that location, you're not going to be able to get the home office deduction. And this is a great question, and I will get to this. This is a great consideration. And it is about depreciation and affecting the value of your home. Yes. So let me get to that at the end of this. Okay. Let's see. If your spouse, you can still deduct it. It depends on there are different ways that you can do this. It should still be deductible if you're both, if you are both self-employed, right? So you can't get double the deduction, but you could get like half of the deduction each, or there's different ways that you can do that. Okay. Yes. So if you're different, is it different if you're an LLC? So LLC files a Schedule C unless you are an LLC that is elected to be taxed as an S corp or a C corp, in which case it's different. But an LLC is Schedule C. So that's what I'm talking about when I talk about, self-employed. Then, that's kind of what I'm getting to. So, and yes, but differently. So let me get to all of this. You guys are asking all the questions, so I'm glad that the questions that you're asking really align with kind of the content for today. So how I'm going to show this, because I was really struggling this morning with it. What's the best way to do this? Because it's hard to talk through. I'm going to talk through it really at a high level, and then I'm going to show you a spreadsheet that I made, because y'all know I love spreadsheets. I got to make a spreadsheet for it, right? So I just whipped this up literally like in the last hour. Because that's, what happens in the COVID world. Everything is the last minute. So let's really quickly, though, talk about the point of the home office deduction. The point is, You use your home office for work. It is your primary place that you are working, right? And therefore, obviously, if you were to rent a place somewhere else, that would be deductible. So why shouldn't a portion of your home? You might have even bought your home, as I did. I wanted to make sure I had an office in the home so that I could work there. So it makes sense that you would get some kind of a benefit on your taxes for this. And this is one of the things about being self-employed that allows you to get kind of some cash where you otherwise wouldn't, right? So this is one of the perks and one of those tax deductions you can only get if you have, even a side hustle, you could potentially get this. So yeah, and so we're going to talk a little bit about all of your questions. I see them coming through. Okay, let's first talk about just the general options, okay? So I'm going to start with the simplified method because it is simplified. And this is relatively new. They didn't always allow for this, but the actual calculation of your home office deduction can get a little bit complicated. And I'll show you here in a minute. So that's why the IRS said, okay, we're going to introduce the simplified method. And the way the simplified method works is it takes the total square footage of your office space, right? You calculate that out. And then you get $5 per square foot. So if you have, a 200 square foot office, that's $1,000 deduction on your taxes that you can take, right? Doesn't mean you get $1,000 back. It's a deduction, just like any other deduction. So you would multiply that by your tax rate. That's how much cash you save at the end of the day. So the reason I love the simplified method is because it is simple. It doesn't require you to track any of your expenses at all. It doesn't require any kind of depreciation calculation, which then we're going to get into the problem with a depreciation calculation here in a minute, which is that if you depreciate, if you take this, if you go the other route, which is you actually look at your actual expenses and figure out the business percent, et cetera. And I'm going to show you how to do that here in a minute. Then you are required to depreciate. And this is if you own. Now, if you rent, you don't have to worry about depreciation. Okay, so if you rent, it's a totally different story. But if you own your home, then you would have to depreciate a portion of your home office, which gives you a higher deduction. Yay! But there are some implications when you go to sell your home. Okay, so that's the thing where there's some depreciation recapture, and you could be in a position where you have to pay that portion back when you sell your home. So that's the biggest drawback to doing the actual expenses method, other than the fact that it's a lot more work. But oftentimes, if that deduction is a big difference, it can make sense to do. So I've done a calculator that you can put in a couple of different options here and see what might make the most sense and decide, okay, does the simplified method better for me, or is the actual expenses better for me? Because that's the question I get all the time. And it's one of those it depends answers. Well, this way you can actually put your numbers in and see. So let's throw this up on the screen. Now, here's my caveat. Here's my caveat, you guys. I literally put this together this morning. So you can download this. It is balancecfo.com/office, and you can do that right now and get on the list. It won't send to you just yet. I'm going to finish this up and make it prettier and test it out a little bit more before I send this to you guys. But if you're watching this on replay, it's probably already available. So again, it's July 22nd. If you're watching this on July 23rd or after, it's out there. But go ahead and sign up, because as soon as I get this done, I will send it to you. So balancecfo.com/office. It's also listed above in Facebook and below in YouTube. Let me blow this up so you can see it. Okay, here we go. So again, apologies that it's not as pretty as it will be in about an hour. Okay, so I don't know if y'all can see that, so I'm gonna blow it up a little bit more. So as I like to do, everything in yellow is what you would fill out, and everything in green is auto-calculated. So here's kind of what you would do to start out. And again, this applies to everybody. Again, how you take this deduction is going to be different, but the way that you want to get reimbursed for this, or the way that you the way that you want to calculate out what you get for a home office deduction is going to be the same, even if you're an LLC, S Corp, et cetera. I'll tell you at the end how this differs for S Corps and C Corps and how this will work as far as actually taking this deduction, because it's not the same. But if you're a Schedule C, you take the deduction right on your Schedule C. Okay, so here's what I want to show you. So we're going to start up here where you put in the total square footage of your home. If you don't know what it is, you can go look at your tax records and you can grab kind of the total square footage of your home. Then you can just, get your tape measure out and measure off your office and put your totals in. So I put some numbers in here just to kind of have them. So I said if we have 2,500 square foot home, 200 square foot of office space, that's 8%, right? Okay. So there's another method. They also say any other reasonable method. This probably makes the most sense if you just have no idea what the square footage of your home is, or even if you just want to compare. You can put in kind of the total numbers of rooms in your house and the number you use. Again, this has to be exclusively, right? Can't be used for other stuff, exclusively for your home office. And you can put that in. So let's say you have 10, and this works if it says like, ultimately, if your rooms in your house are relatively the same size, you're not going to use like hallways. These are actual rooms, right? And this can there are so many questions you get with this, around like, well, my dining room is, we have an open concept. It's like, does that count as multiple rooms? You got to use your best judgment, right? And document what you did and how you kind of figured that out. But that's a good thing to compare. So you can do it either way. And honestly, I say go ahead and figure it out both ways and see what is higher, right? Take the higher one. So in this case, it was 10% if I go by number of rooms in the house. All right. So in this case, I'd probably say, well, I'm going to use that 10% because that's going to give me a higher deduction. So that's one way you can kind of compare and see what's going to give you the highest home office deduction. Okay. So then, like I talked about, there's the simplified method. So all this method is doing is taking $5 per square foot of office space. So it's taking that 200 times $5. All right. So it's saying, okay, if you just didn't want to do any of this work, if you wanted to like forego the rest of the spreadsheet, which some of y'all might, right? Then that would be your home office deduction. Simplified, yay, done. No worrying about depreciation, recapture, any of that jazz. You just take that amount. It maxes out at $1,500. So if you have over 300 square feet of office space, it's going to max you out at $1,500. If you do the actual method, it won't max you out at all. So that's something to know as well. But we calculated that out. Great. We know that's $1,000 deduction that we would get if we took the simplified method. All right, well, let's say we're like, you know what? I want to compare that and see, which I do suggest, you kind of put some numbers in, even if they're round numbers. This spreadsheet, I got to always say it, disclaimer, this is a simplified calculation. Okay, so this is going to estimate you. This is not, it doesn't go into all the little intricacies that the calculation would actually go into, but it's going to give you a good idea of which one is better for you, which is the purpose of this spreadsheet, is just to kind of give you that overall advice. Which one is probably a better fit for you? If it's the simplified, then you get to say, bye-bye to the rest of this. If it isn't, then you got to be, keeping all of these bills and tracking all of this yourself to make sure you can maximize that deduction. Okay. Let's see. So we're going to jump down into here. So you're going to be able to deduct. There are things called indirect expenses. So you're going to add indirect and direct expenses. Indirect expenses are things that impact, in general, they probably impact your whole house, right? So property taxes. Well, you don't pay property taxes for your home office. You pay property taxes for your home. So you're going to put the full amount of all of those things in here. So again, rent, if you rent instead of own, that's going to make things a little easier. I think oftentimes the home office deduction makes a lot of sense for people that rent. If you have a 2-bedroom apartment and like 40% of your apartment is your home office and you're renting and don't have to worry about depreciation, often doing the actual method is going to yield the best results for you, but you can calculate it out and see. For mortgage, you don't deduct your full mortgage payment. Why? Because we're also going to do depreciation, which depreciation is basically kind of estimating out the amount of the principal that it's kind of that would be double. Again, I keep wanting to say double dip, but you know what I mean. That would be double counting if you took depreciation and your full mortgage payment, because those are kind of similar things. So instead, you're going to take just your mortgage interest. All right. So put that for the whole year here. And then if you pay mortgage insurance, you would have that there, hazard insurance, your regular bills, electricity, gas, sewer, that kind of stuff. If you did any home repair, so like if you had to replace a furnace, now this wouldn't count if you did repair on, I don't know, something that had no bearing on, the office itself, right? Like if you repaired your floors in the kitchen, like that's not going to count. But if it's something like your furnace or something that impacts your office in some way, you can put that in. And again, we're only going to be able to take a portion. It's not like you can take the whole thing as a deduction. I'll show you how that works in a minute. But you can kind of go in and put in and fill in all of these expenses, okay? All right, so these are called indirect expenses. They impact your whole home, but you get to take a portion of them. So then it's going to calculate out, okay, that's $8,800 worth of expenses, actual expenses. We're going to take 10%. Why 10%? Well, remember, we calculated up here that square footage, if we did it that way, was 8%. And if we did it by number of rooms, that's 10%. Well, I'm going to take the 10%. And so now it's going to come down here and calculate that 10%. So that's the percent of business mortgage, I guess I would say. Of business, y'all know what I'm saying. Business use of your home office. There we go. So that's kind of what you would take for indirect costs. Well, that's not all you can take. All right. So that's $880. If you just stopped there, well, the simplified looks better, right? Because you're $1,000 with the simplified. But there are more things that you get to take. So let's come on down here. Let's talk about direct expenses. If you have expenses that are directly related to your office, okay, if you paint your office, all right, or if you put up, like I put up this whole wall, in my office, this would count only if I'm taking the actual expenses method. And the full amount would be a deduction in that case. So if you painted it, whatever you do, that kind of thing, you're going to be able to put that in here. And you'll notice that does not get times by 10% because that impacted your office, the whole thing. So you get to take those. Again, simplified method, you don't. So if you do a lot of improvements in your office, then that year you might want to take the non-simplified method, I guess I would say. The actual expenses method. Okay, so that's direct. Now let's talk about depreciation. Okay, because that is an indirect, but I wanted to show a calculation here. This is the piece, this is going to estimate it. Work with a tax advisor. This is not your official depreciation. This is going to estimate out what your depreciation would be. So use it for that. Don't use this to actually do your taxes. Okay, guys. But you can definitely use this to kind of see about what it would be. So you're going to put in the cost basis of your home. What's the cost basis of your home? Well, usually it's what you paid for your home. All right. So you're going to take what you paid for your home. If you did any major improvements to your home such that your home is worth a lot more now, then you can add those in as well. Right. So what's, into your cost basis. So importantly, you are supposed to subtract out the value of land. I don't have that in here, but in general, you subtract out the value of the land that it's on. This probably makes more sense if you have a lot of land. If you're in a townhouse, you don't have to do that. But if you have a lot of land that's a lot of what your property is worth, you would have to subtract that out of the cost basis because it's just the cost basis of your home. Okay. Your tax records might give you some indication of what that split would be as well. So you could check there. But land is not depreciable because land does not decrease in value, right? So so you take that off when you're doing this. But that's kind of just a technicality. Again, when you do this for real, you're going to want to work with a tax accountant, especially if you're not going to do the simplified method. It can make sense to work with somebody on it. You should have, if you're self-employed, I think it's always good to have somebody else do your taxes anyway. You guys know I always recommend that. Okay. Then you're going to put in the month of the year you first started using the office. And now see, this is what happens when I when I put something together super quickly, I misspell words. So that's why when you sign up for this, you won't get it yet for probably another hour or two. So you're going to pick the month. So there's a drop-down box. You're going to pick the month. So if you didn't start working in your office until June, you're going to pick that. But for most people, it's probably going to be January if you worked in there all year. And then that's going to autofill. So you'll see here, just watch the depreciation factor. This comes from Form 8829. It's part of your personal taxes. When you take this home office deduction, your 8829 will be filed, but it will change depending on what month you pick. But we're just going to go with January. And then again, we're going to take our percentage of business usage. So it's basically taking $250,000 times 2.46 times 10%. And that's going to give you your depreciation that you would be able to recognize, okay? So what are we going to do for the actual expenses method? Well, we're adding the 880 indirect plus 300 direct plus 615 of depreciation. That's what you're going to get for your actual expenses method, okay? Simplified method, remember, it was just 5 times, 200. So it was 1,000. So in this case, right, this is green. The one that gives us a better deduction is the actual expenses method. Now, you don't always necessarily want to choose that though. That probably indicates that yes, that's a better deduction for you, except what I talked about before, which is this idea of depreciation recapture. So when you choose the actual expenses method, even if you decide, you know what, well, I'm not gonna do this depreciation, I'm not gonna include it. If you own your home, when you go to sell it, there could potentially be some recapture of that depreciation that you would have to pay back. So if you took $600 a year for 10 years, you may have to pay up to all of that back on your taxes. And that can get expensive and oftentimes is something that is unexpected when you sell your home. So for some people, it can actually make sense not to do it that way, if that makes sense. So it's up to you. Again, the 2 drawbacks of doing it the actual expenses method, it just takes more time. There's more effort involved in doing it, more tracking, more things you have to, receipts you have to save, etc. And you have this depreciation recapture. That does not exist. Again, if you rent, then that second point doesn't matter at all. It's just, it's probably makes a little bit more sense for people who rent. Okay. Let's see. Let me see your questions really quickly before I go. So for this, I believe the way that this works, so I don't do tax prep, important to say, I'm a CPA, I don't do tax prep. I believe the way this would work though, is that you would be able to get 2, if you have 2 different offices in your home, because even if it were just you and you used 2 spaces, like let's say you used one to work in and one to store product, you could get deductions for both of those. So the fact that you have 2 separate businesses running out of 2 separate offices, yeah, as long as they're used primarily or exclusively for your business, yeah, you could. Okay. Let's see. I don't know the answer to this, Pang. I don't think it has to be. So if the mortgage is not in your name though, you're probably paying rent is what you're paying, right? So you're not actually paying the mortgage. You're paying rent to the person who has the mortgage is really what that is. So even if you have it kind of set up where you're splitting the mortgage, it's really rent that you're paying, which is actually good because then you don't have to worry about the depreciation piece. So I would include that as rent and not as mortgage. Okay. This is really interesting. I have an LLC started 4 years ago, and every year my CPA skirts around doing my home office deductions. Yeah, I mean, so that's interesting. I think there was this common misconception for a while that this was kind of a red flag, but this is this is low-hanging fruit, I think. And if your CPA is not doing the home office deduction or, walking you through how to do it, it may be that they're just taking the simplified, and maybe they think that's the best one for you, but it is good to compare it out and just make sure. You're welcome. I love a good calculator. That's like my favorite thing. So interest mortgage can be deducted. Yeah, so that's deductible. Yes. And I'm actually thinking about this now. There may be an adjustment. I'm going to look this up because there may be an adjustment on your Schedule A where you deduct your mortgage interest, where you now again, a lot of people don't actually deduct mortgage interest because they don't itemize. You only deduct mortgage interest on your personal return if you itemize. So I think that's what you're talking about. If you do, there may be an adjustment for double counting, but I'm not certain of that. I'm going to look into that and see. I don't know if Bree's on here. She probably knows. I'm going to check into that, but a lot of people don't even deduct their mortgage interest on their personal return anyway, because the standard deduction is higher. So especially after the Tax Cuts and Jobs Act, with all the changes that they made, the proportion of people that actually itemize is much smaller now. Okay, so can your business pay you rent? Can your business pay you rent? No. So if you're Schedule C, no, that's generally not what you would do. You would just take this deduction. You wouldn't have your business pay you rent. Some people set it up this way. Probably more common in corps. And there are some rules around that. But I'll tell you what I would say and what I see most often in this scenario is if I'll switch for those of you guys who are my corps who are here. Same kind of thing. You can do this kind of similarly and see what makes sense. Typically, though, you don't take home office as a deduction on your corporate return. If you're an S corp, you file an 1120S corporate return. Okay, you don't pay taxes on it because it all passes through to you individually, but you do file that return. This would not show up as a home office deduction there. Okay, not like it does on a Schedule C where that's a line item where you can deduct it. As an S corp, what I typically recommend, I'm going to take this off the screen just for a minute and throw myself up here. As an S corp, what I instead recommend is having what is called an accountable plan. Okay, I talk about this a little bit in my Financial Fitness Basics course for those of you that are in it and have gone through the S corp bonus module. But an accountable plan is essentially where you're reimbursing yourself. So the business is reimbursing you for those costs. The great thing about that is you don't actually deduct this anywhere. All it is, so when the business reimburses you, so you can set up and say, okay, we're going to use the actual expenses and the business is going to reimburse me actual expenses. Or you can say, the business is going to reimburse me based on square footage and do kind of like the simplified. You can do it either way. But you basically have like a paper that says, here's how I'm going to reimburse. It can be the owners and it can also be any other employees. So you can have an accountable plan for other employees as well. And what an accountable plan really is just a sheet of paper that says, I'm going to reimburse X employee for these types of expenses. And here's how often I'm going to do that. You should require documentation to be able to reimburse them, whether it's yourself or another employee. But it's basically expense reimbursement when you're an S corp, rather than setting up like a rental agreement. There can be reasons, again, to do things like that. It gets a little bit more complicated. But usually if you're just talking home office deduction, the easiest thing to do is just say, okay, well, I am going to reimburse employees. Then you get the deduction as a business. It comes off as a business expense. You reimbursed employees, i.e. yourself as the owner, right? And that reimbursement would be non-taxable as well to the owner. But you have to have that accountable plan for that to be the case. Otherwise, that may be looked at or somehow get picked up in income. But basically, you can set forth how that reimbursement takes place, right? And if you're going to use actual, or if you're going to use some kind of simplified, which I recommend kind of aligning with the IRS guidance on that, if you're going to do that. But that's really how it's going to work for you. So it's not going to show up as a line item. It's instead going to show up as an expense reimbursement on your corporate, and you're not going to claim it anywhere actually on your personal return as an S corp owner, because it's not income to you. It's reimbursement. Does that make sense? I hope that makes sense. It is a little bit different when we get into S corps, but that allows you to take that deduction and not have any negative tax consequences from a personal perspective. Let's see. Owner of an S corp have a regular office and a home office. No. So in general, if you have both, you're only supposed to be able to take one, because it needs to be your primary place of work, right? So usually you're only going to take one. Now, I wonder though, with an S corp, there might be a little bit more flex because it's really the business that has the office, and then maybe the owner has the home office. So you may have a little bit more flex still to reimburse for some of those personal expenses or some of those home office expenses as an S corp. Again, it's a little bit different. So you're not taking a deduction, you are reimbursing employees. So if you come up with that as a plan, you may be able to do that. It's not going to show up anywhere. They just need to be able to track what those expenses are, if that makes sense. So let's see. Yes. So, Bobby, I talked a little bit at the beginning more about sole proprietor. Yes. So, sole proprietor, it just shows up as a deduction. You don't have to do the expense reimbursement. You can. I actually do. People ask me this all the time about how to actually affect this. A lot of times what happens is you just pay your expenses personally, right? You just pay them, you're paying your mortgage like through your personal bank account, which I recommend. You pay your utilities through your personal account, of course, right? You're not going to try to split payment or anything crazy like that. And a lot of times it's just a tax adjustment at the end of the year, but then it never really gets in your books. So it never really shows up anywhere on your ledger unless you go in and make those tax adjustments, which, let's be honest, a lot of people don't. So what I actually like to do, because I think it helps kind of keep that business personal separate, is I actually think it's good to have a process for reimbursing yourself regularly from your business for those expenses. So if you take the simplified deduction and you're going to get $1,000 of a deduction, then you can take $500 every 6 months if you want to, or you can figure that out. But you can take that out of your business as you want to. It doesn't really have any tax impact as a sole proprietor because the amount you take out of your business doesn't really have an impact. But it is a way to get it into like your QuickBooks, and then you can just call it what it is, which is a reimbursement for those expenses that you're paying. But yes, this is all applicable to sole proprietors, LLCs who take that deduction on their Schedule C. Okay. I'm seeing so those of you who are asking questions about like EIDL and PPP, I'm not going to get to those today. 1:30 on Friday is when I answer stimulus related Q&A questions. So I'm just trying to keep this focused on a specific topic. Okay. Let's see. I'm looking through to see what questions I have. Bobby says, if I can rent my office space in my rented room that I pay each month, my office takes up 3/4 of my rented room, 50% should be a good reimbursement. So yeah, so it has to be used solely for business purposes, right? And if you're paying rent, then that rent is going to show up. Download the tracker. I think it's going to make it easier to see how that's going to calculate out, because I would calculate it. I wouldn't even estimate. I would just calculate exactly out what, your deduction would be, and reimburse yourself for that. But you don't have to. You don't have to reimburse yourself. I just think it's a good practice to get into. Okay. Let's see. So this is a question I'm not sure the answer of, that I've gotten recently, is that you primarily work at an external location. You had to work from home, went back to work, but we're not at full capacity. So if you're still working from home, if it's part-time, no. If you really kind of can't take both at once, meaning, if you're paying rent on an outside office and you're working from home and getting that deduction, that's kind of getting a double benefit. So you can't necessarily take both of those at once. Now, if you shut down, if you worked from an office for 6 months and then you stopped paying rent on it and you shut it down, right? Then you could, but you can't kind of do both. It has to be your primary principal place of work. Yes, this applies to a single member LLC that files as an S corp. Like I said, I talked about S corp a few minutes ago, where I was talking about setting up what's called an accountable plan, where you actually reimburse yourself as the business owner for those expenses, if that makes sense. Okay, So this was a lot. Like I said, I'm gonna kind of pretty up this spreadsheet and put it out there. It'll be at balancecfo.com/office. You can go sign up right now. The link is live. I just don't yet have this attached. So I'm going to finish this up and then I'll send it out to all of you guys who sign up for it. And if you're watching this later, you'll be able to grab it as well. If you have stimulus questions, come on over and ask me on Friday. Keep letting me know what you guys want to hear about because I'm going to kind of mix it up a little bit. We're not going to do all stimulus all the time anymore. I do want to give you some content in other areas as well. So I'm open to ideas for what you guys are looking to hear about as I kind of build out, the content calendar. Okay, guys, y'all are awesome. Oh, shoot, Cheryl, you got me. Thank you, Cheryl. Yes, daycares. Okay. So daycares are different. So for a daycare, right, you're probably not using a portion of your house specifically for one thing, right? But you are using your home for work during certain hours exclusively. So it's a little bit different than with a home office where it has to be only used for that thing. Well, you're probably using your living room, right? Like you probably don't have a specific place in your home you're using for your in-home daycare. So in that case, it goes by the number of hours, the amount of days usage and hours usage. So I'm actually gonna real quick, I think the easiest thing is to show you how this comes into play when we are looking at the form, which is the tax deduction. Give me 1 second. Here we go. Okay, so I'm going to show you guys Form 8829 really quickly. I'm going to have to, and this is the form that goes, again, if you're an LLC or a sole proprietor, this is the form you're going to file with your personal taxes. So this applies to all of you, but you can see here under Part 1, this is where you're going to put area used regularly and exclusively for business, regularly for daycare, right? It kind of says that, or for storage of inventory. So it's going to tell you to put in that square footage. It's going to tell you to do the total square footage of the home, right? So you can do that and then get your percentage. Okay. And then, down here, for a daycare, right? So we're still dividing out the percentage, but for a daycare facility is not used exclusively for business, go to line 4. Well, daycares, it says multiply days used for daycare during a year by hours used per day. Okay, so you're going to put in the hours used per day. So it's going to go by a little bit of a different thing. So the home office, you're not going to figure out the number of hours you're using it exclusively for business per day, kind of thing. But for daycares, you can do that, which I think is really good because otherwise, if they went with the exclusive use, right, daycares couldn't deduct any of their home, which doesn't really seem fair given the amount of time you're dedicating your home to being a daycare facility. So that's really the main difference with daycare, but everything else is really the same. It's just the calculation of how you get to the percentages. Let's see, summer camp. Yeah. So if you are doing it out of your house, then yeah, you should be able to do this calculation and write off a portion of it. So that is the great thing. If you're a daycare and you're not writing off, if you're a home daycare and you're not writing off or summer camp, a portion of your home, you're missing out on a potentially pretty big deduction. So again, here's where you can go in and figure out your allowable deduction, right? This is where it's going to have you put in all those expenses. Here's where it's going to have you enter in all the depreciation information on your home. But a lot of this is really similar to what's in the calculator. So, it's just kind of calculating out all of those different things that could potentially be included when you're looking at your home office deduction. But again, we don't regularly, I like to pull up the tax forms because I know nobody likes looking at tax forms, but it does help you to understand exactly where this stuff goes. Because I know a lot of times we give information to our tax preparer and we're like, I don't know what they did with it. Or we give, and we don't even know how they're calculating the deduction at the end of the day. Or we, do it ourselves in TurboTax and we just answer the questions. But this can really, looking at the actual tax form sometimes can help you understand exactly what that information is being used for and how it's being calculated. So this is Form 8829. You can just search like IRS Form 8829 if you want to take a look at it and just get an idea for what it is, because I think it really does help you understand better sort of the premise behind the home office deduction and how it's calculated. But yes, daycares are going to be different because they're going to go based on the amount of time used for that, not necessarily just the square footage. It doesn't have to be only exclusively used for that. Okay, so that is my chat today. One of these days, I'm going to keep these things down to 30 minutes. I promise that I will. But I did want to kind of, do something because that was one of the topics that kept coming up. So if you do, just real quick, if you have an EIDL loan, right, and even a PPP, although I think with the 24-week option, there's less reason to have to try and deduct your home stuff. But with EIDL, in theory, you could reimburse yourself. It should agree, though, to what your tax calculation would be. So that's where it's good to figure out, like, okay, well, what deduction am I getting on my taxes? And if you have the EIDL loan, you can use that to reimburse yourself. Just make sure you're keeping really good records if you do something like that, right? And anytime you're paying yourself, you need to be able to justify that it's not just payment to you, that it's for reimbursement purposes for these kinds of things. Okay, hope this was So this is in the spreadsheet. If you do a home office remodel, yes, it can be a part of the cost of the deduction if you use the actual expenses method, not if you use the simplified method. So that's one of the benefits as well. Okay, so balancecfo.com/office. Grab that. I'll be sending it out later today, and I hope this was helpful, you guys. And I'll talk to you guys on Friday all about stimulus stuff. I promise. Okay, bye, guys.